Okay, so question 2 is if they ask you to work out the VAT payable refundable, this is more or less what it would look like. Okay, so in this question, let's quickly scroll to the end. They tell you to work out the net VAT due or refundable for the VAT period January and February 2020. Okay, so they give you, this is a 2-month VAT period, so that is generally a company that earned less than 30 million during a year, would have been registered on a two-month VAT period. Now, based on the information, you have to go work out the output VAT, the input VAT, and then only you can calculate the VAT due or refundable. Okay, now based on this information, we know it's a VAT vendor. All accounts for VAT on the invoice basis, so that means it is the earlier of the invoice, all payment is generally accounted for. If it's only payment basis, then we only account for VAT once the payment has been received or made, but not a lot of companies are allowed to register in that way. They tell you all amounts are exclusive of VAT. So all of the amounts listed here does not have VAT in it at the moment. Okay, so they give you receipts. You get a receipt from a debtor. There's exports to Namibia. There's credit sales. Then payments made. You've got purchase of inventory, entertainment of contestants, Mango Air Travel. There's a Sanlam Life for owners' life insurance premiums. There's Swanee municipality rates and taxes. Then we've got waters and services. You've got donation to cancer, a registered PBO. You've got cash for prepaid electricity. You've got a capital bank in payment of hire purchase installments. You've got office chairs, couch in the canteen, cleaning materials, a payment to a creditor for settlement account, SARS, UIF, and pay as you earn, and you've got repairs that was from a not a VAT vendor. Okay, so you can see there's quite a lot of different types of transactions happening here. Now, what was the rule that I said? How do you know whether it's output or input VAT? What was the general consensus on that? When you start with this question, how do you know it's output VAT or input VAT? What type of transactions do you look for? Okay, so Antile says input is on purchases, outputs is on sales. Okay, or cash receipts. So that is correct. So let's start with a receipt from our data. Okay, so I'm just going to share the Excel file with you guys. Just let me know if you can see it. Okay, great. Okay, so the first entry based on the information we had is we had a receipt from a debtor. Now, a receipt from a debtor, we will not actually raise output VAT on it now. The reason for that is a receipt from a debtor is not a supply of goods or services. Okay, so we will not create any VAT on that. When we did the original sale and created the invoice, we would have accounted for the VAT then. So the receipt is generally after the invoice was issued. So in that scenario, it would be a zero because it's a non-supply. Okay, so that is your rationale for making it a zero. And these type of questions, if something is not applicable, you have to indicate a reason why and give an amount. Export sales, based on the information, would also be zero, but because of the fact that it's zero rated supply. Okay, so that is why it's a zero. Then our credit sales, because it's not specifically stated that it is zero rated or export, it would be a standard rated supply. Because the amount is exclusive of that, we were multiplied with 15 over 100. Okay, so this is where it becomes important to know what fraction to use. So what happens with these types of questions? If students did not read the information appropriately or they missed something, they will do this entire calculation correctly and apply the incorrect fraction and fail a question like this. So make sure you read it carefully. If you are stressed, which happens, maybe you read it 2 or 3 times just to make sure, and then you continue with the question. Okay, before you go on with it. So for each of these, you would have received the mark. Then you see here, you have to show the total output VAT. Now for that output VAT, you generally, depending on who set the memo, you can get up to 2 marks. So they generally give you accuracy mark if you've done it completely correct, and then you get a method mark. Okay. Then we move on to the input VAT. So for the purchases of inventory, that is trading stock. So we would be allowed to claim the input VAT for that on 15%. Okay. Then the next item they had was entertainment of contestants. Now remember, entertainment expenses is prohibited. It is a non-allowable thing. So I've indicated here for you just so that you can see. Although this may have been purchased from a VAT vendor and VAT was paid, it may not be regarded as VAT put is not an allowable item. So what it basically says is, based on the rules, this one is denied by SARS. Even though you might have paid VAT, you are not allowed to claim it. Then our Mango air flights, because of the fact that it is not on land or sea, it is standard rated, so we can claim the input VAT on that. Then the next one we had was Santam Life for our owners' life insurance premiums. Now, generally on life insurance, we are not allowed to claim the VAT because of the fact that it is an exempt supply. So it's specifically exempt from VAT. Then our rates and taxes is also 0 rated. So that is actually a 0 amount there. But the water and electricity or the other services are standard rated. So for those ones, you are allowed to claim input VAT. So just remember, rates and taxes, 0. The other ones have a VAT component linked to them. Okay, then the next one we've got is our donation to Cancer, a registered PBO. It is an exempt supply, so there's no VAT linked to that. So it is a 0. Okay, then we had cash for prepaid electricity of the business. And then the next one was a Capitec Bank in payment for hire purchase installments. Okay, so the first one is the cash for the prepaid electricity. You would be able to claim the input VAT because we do the earlier of the invoice or payment date. Now in this scenario, it would be payment date. For the hire purchase or the capital, the payment for the hire purchase is not a supply of goods and services. Okay, when you, however, get the physical goods, then you would raise the VAT for that. Then the next item was office chairs and then the couch in the canteen. Now your office chairs, you are allowed to claim input VAT for because that is part of your business and carrying on your trade. Whereas the canteen couch is seen as entertainment and is a non-allowable deduction. Okay, then we had cleaning materials and a payment to creditor for settlement of account. Now, cleaning materials is a normal supply of goods and services, so that I can deduct at the standard rate. However, a payment to my creditors is the vendor is on the invoice basis and not the payment basis. So what that means is we would have already claimed the input VAT when we received the invoice initially and not when we make the payment. Okay. Unless we paid it before we received the invoice, then you would have claimed it. But in this scenario, you can assume the invoice was received previously because it's a settlement of account. Okay, and then the last item we had, last two items were SARS for UIF or pay as you earn, and then for repairs and maintenance from a non-VAT vendor. So your UIF and pay as you earn is also not a supply of goods and services. Okay, so that is another form of tax we are paying, so we do not pay VAT on that. And then the non-vendor amount is also zero because of the fact that it's a non-vendor. So they would not have added VAT in the first place. Then you add all of that together to get to, let's just make sure I've added everything. Nope. Okay, so that means the total input VAT was 14,613. I deduct that input VAT from the output VAT of 17,434 to get to net VAT payable of 2,826. Okay, do you guys have any questions on VAT and the calculation of it? Okay, I see there's a comment in, okay. Is there any questions on question 2 online or in class?